Alright, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good news stuff for you today as usual. But before we get into the main story, I'd like to give a shout out to a donator to the channel, a Gravicam for 0.0199 Litecoin. Thank you very much for that donation. Always like to shout out to the donators. Some of them are anonymous and I just throw them on there. But thank you for the donation. But the main story of today is that Bitcoin price is being manipulated, says Forbes macroeconomist. So according to Peter, let's call him Cheer. Peter Cheer. There's an ongoing manipulation of Bitcoin price. What the macro and fixed income expert isn't sure of is whether such price manipulation are against the law. The DOJ recently began investigating suspected trading malpractices in the cryptocurrency market. So at one point, this is definitely not illegal, nor are pump and dumps. Pump and dumps are illegal in the stock market, and that mostly stems from the 1920s, the crash of 1929, because there was nothing but these pump and dump groups, and they would all get together and pump and dump, unknowingly to the public. As in the 1920s, that's when the public really started to get into trading stocks and things like that, and so they were a little naive of the practices of the actual big investors, and so there was a lot of pumping and dumping and trading malpractices, if you will, and so that's kind of where that regulation came from. But in an unregulated crypto market, it is not illegal, but it may be sooner or later here, as the Department of Justice is investigating that, and there are some articles on that. So writing in an op-ed for Forbes, macroeconomist Peter states that he'd be surprised if there weren't any shenanigans going on with the way Bitcoin prices move. Hey, what's that restaurant you like with all the goofy stuff on the walls? You mean Shenanigans? If you guys don't get that reference, you need to watch that movie. Whether the activities meet the legal definition of manipulation or can lead to a criminal indictment remains to be seen, but I'd be shocked if there wasn't manipulations of prices occurring. There is. I mean, you could just take a look at a chart. You're like, that's probably manipulation. Normally, a coin doesn't go up, 150% in like 40 minutes. Without any otherwise good news promoting that. So never forget rule number 2 of the 3 rules of Bitcoin. There are no rules. So according to Peter, whales and miners have vested interest in higher Bitcoin prices. Of course, everybody does. For miners, it makes sense for them to want to push prices higher from an economic perspective. Otherwise, mining no longer becomes a profitable enterprise. Well, I do agree with that, but I mean, it's kind of like saying like everybody wants more money. Really? Do they? Wow, that's a shocker. Peter drew comparisons with the mainstream market, arguing that wealth concentration gives whales the incentive to push prices higher. There is, however, a significant aspect missing from Peter's analysis, as it ignores the incentives for price declines. Whales can take advantage of these sell-offs by shorting Bitcoin and strengthening their monopoly of the market. They can acquire more Bitcoins at lower prices before driving prices higher again. Think about futures. December 18th, we went from 20,000 to 6,000 within, it was a couple weeks or a few weeks. So reports emerged that the DOJ and the CFTC were looking to probe suspected Bitcoin price manipulation. According to inside sources, spoofing and wash trading are the focus of the investigation. The DOJ believes traders are engaging in illicit trading activities to move crypto prices in their desired direction. So Peter is correct in pointing out the lack of regulations in the market make it possible for such alleged manipulations to occur. Bitcoin is experiencing a week-long decline that's seen the number one crypto bouncing at 7,000. So according to Peter, the crypto market is losing steam due to an amalgam of problems that have slowed down adoption rate. I really like amalgam. It's a really great word. He also pointed out that the failure of the market to rally after consensus has taken some of the bullish hype away from the industry. And thus, as an investigation probe suspected price manipulation, Peter believes the crypto investor confidence is at an all-time low, which I kind of agree with. Ever since the crash in December, there have been less Google searches for Bitcoin, less trade volume overall. The hash rate is going up. That's basically pretty much it that's going up. So we're sort of stuck in this limbo between 7 and 10,000. And every time it gets to 10,000, it drops all the way back to 7. And this really wasn't always the case in Bitcoin. Now, there's always been these big dips and crashes over time. But this is one of the most unusual ones, with all the hype that led up to the end of 2017, and then that hype just kind of went away, because I think people, now I don't want to say that people realized they couldn't make money with crypto, because you definitely can make money with crypto. I mean, trading is very easy. Mining it's very easy, as long as you have the hardware to do it. But I think people thought that it was going to be like a Ripple situation, or like investing in Bitcoin when it was 30 cents sort of situation. Like Bitcoin was going to go to $1 million. And for every Bitcoin they had, they were going to gain 10,000, 20,000% on it. And this is not the case unless you get an ICO coin that's less than pennies, and it just so happens that you invested into that one that's going to go through the roof. So if you're investing into Bitcoin, you need to understand that the gains on it can be really good depending on how much money you have into it, but they're not as crazy as they once were, and you can still make money. There's no doubt about it, but I think people had the wrong idea. I think they had this really, really fast-paced mentality, and there was a lot of traders who would otherwise not be into trading stocks if it was not for crypto. That was never in the stock or mutual stock or dividends or anything like that kind of market beforehand. So, it sort of convinced a lot of people to get in because of, all these, John McAfee thinks it's going to go to $500,000. This person says it's going to go to $1 million. And it really gave people the wrong idea that a stock can continue going up forever. And again, it's just like the 1920s. If you watch if you watch a documentary on the stock market crash of the 20s, it is extremely similar to crypto, except I think crypto is a little different, and I know that everybody says it's a little different every time some kind of bubble comes along, but crypto is different. Blockchain is definitely here to stay, but no one crypto is necessarily safe. Another crypto might come along in a year that totally blows all of them out of the water. That's just so amazing. But blockchain is definitely here to stay, but cryptos can come and go. They're not necessarily the same thing as just blockchain itself being used in a blockchain way and not necessarily just a cryptocurrency way. So strike 3, Verge suffers a suspected 51% attack, a third one. I don't know why I messed up the word suspected. Pretty easy to read, but you try it. Come on, you guys all say suspected 10 times fast. Somebody might mess it up. It'll make me feel better. So once again, it has potentially, this is an alleged, this isn't necessarily confirmed. So far Verge has been hit by 2 confirmed 51% attacks. I don't really like to call them 51% attack. They're more like a timestamp spoof mining attack. But either way, we all kind of get what is going on with Verge right now, is that somebody keeps essentially hacking the timestamp of the mining and getting themselves millions of dollars in Verge within hours or days. And apparently the developers have no idea what they're doing because they still haven't fixed it. So a Bitcoin Talk forum poster with the moniker Chief56 called attention to a Verge blockchain address with some odd transactions. Upon closer examination, these transactions appeared to have strange timestamps again that couldn't be found on other explorers, signaling the possibility of an ongoing double spend attack. Other members of the forum posted addresses tied to the first hack, with some of them showing negative balances. According to Chief56, one of the addresses holds a total of 142 million stolen Verge. So on May 29th, OC Miner, the forum poster who identified the first attack in April, confirmed there was indeed an attack. However, a look at the data provided by the Verge network shows no drop in difficulty for any of the 5 mining algorithms. The previous 2 attacks have taken control of mining algorithms to hijack the mining of the blocks on the blockchain. And Verge proponents point to the absence of normal block production rates in the last 1 week as proof that there hasn't been any attacks since May 22nd. So at the time of this writing, no smoking gun evidence other than the assertions of a few Bitcoin Talk users have provided. We will continue to monitor the situation, as the article suggests. So even if the reports of the third 51% attack turns out to be untrue, Verge is already facing a multitude of problems. 2 confirmed high-profile attacks using essentially the same method in the space of 2 months does not inspire confidence. After the second week, the Verge development team created a patch to prevent further exploits. However, reports indicate that patch was allegedly copied from Shield Currency, a little-known coin launched in 2017. Some commenters say the fix is inadequate to solve the hacking problem. So this is honestly, Verge is just made by amateurs who just barely managed to make a currency. And then really, honestly, just barely managed to hype everybody and get a whole bunch of donations. And then say, hey, we're paying Ledger with all these donations. And then Ledger's like, hey, nobody's paying us for integration for our wallet. It's free. And everyone's like, what's that all about? And then Verge is just kind of like, we'll just be quiet about that one because that didn't work out. Let's say that all the donations were for our partnership, even though nobody should ever pay for a partnership. You should never pay for a partnership because it should be making you both money, whether it makes the other person a little bit more money or you less money, or vice versa, whatever. A partnership is a partnership, and whether both people are making some kind of money, that's what it should be. You shouldn't really have to pay for a partnership, okay? And they pay for a partnership with Pornhub, MindGeek, whatever. That didn't work, so now we're down to like 3 cents with Verge. Weiss cryptocurrency. I don't know if that's Weiss or Weiss. I don't know if that's German or not. Cryptocurrency ratings recently scored Verge a D plus and C minus in both commercial and technical parameters, respectively. It should be even less than that. The price of Verge has dropped by more than 50% in the past month. So an article here is saying that you can now 51% attack a coin for as little as $500. So Crypto51.app is a new website that tracks the theoretical cost of launching a 51% attack on a proof-of-work coin. It calculates the cost of attacking each coin for an hour, during which time it should be possible to confirm 6 or more blocks for a typical proof-of-work coin, and to use this window to push through double-spend transactions before depositing these funds in an exchange. In reality, there's no guarantee that a 1-hour attack would work, as this would quickly be detected and exchanges placed on high alert for any suspicious deposits. It's certainly feasible, however. 18 million attack on Bitcoin Gold proved that much. The ease with which a coin can be commandeered for nefarious purposes depends on a number of factors, including its current network hash rate and hashing algorithm. Coins that use the equihash algorithm are particularly susceptible to nice hash, whose hash power is colossal. So, it's really interesting that this article states that, and one of my viewers actually stated that as well, that all the hash power from Bitcoin Gold could have been from nice hash. And and I didn't really consider that at the time. And as soon as I read it, I'm like, yeah, that's totally a thing. It could also be coming from the equihash miners that Bitmain made. But I'm not sure how many of those are available to the public or if Bitmain themselves are using them at the moment. So I have no evidence whatsoever of that. But the evidence that I do have is that they actually made them and that they're actually, excuse me to use the word colossal again, but I figure this is a really good time to use it. Their hash power is indeed colossal. 10,000 souls for only $2,000 and 300 watts is easily the most efficient ASIC miner I've ever seen. That is insane. It's like $50 a day for equihash. You would essentially pay that ASIC off extremely fast. So Bitcoin has a 1 billion market cap. It's a top 20 currency. It shouldn't be, but could be 51% attack for a mere $557 thanks to its choice of algorithm and low hash rate. Bitcoin Private, recently backed by professional shiller John McAfee, could be attacked for just $778. Ever since Verge was attacked twice in 2 months, in between successful attacks on Bitcoin Gold, Monocoin, and possibly Electronium, miners have been on the lookout for signs of another attack. So only today, May 29th, Verge is reported to have suffered its third 51% attack. So nobody knows for sure on that. So I will give an update on that probably tomorrow or at some point. I'll see it in the news and I will bring it to all of you. I don't know what the picture is for. I guess it's somewhat relevant. So moving on. So EOS is not done dumping Ethereum yet. So if you don't know, basically, EOS obtained billions of dollars in Ethereum, and their direct competitor is Ethereum. So they essentially gained all this Ethereum in their ICO. Easily one of the biggest ICOs, if not the biggest ICO of all time. It was incredible. So they gained billions of dollars and millions of Ethereum. And once again, their direct competitor is Ethereum. So if you see where I'm going with this, before I even get to my point, congratulations, you're in the IQ 100 club. So EOS can essentially just sell all of their Ethereum, dump their competitor, and make everybody kind of come along and move on to EOS. Now, is that a good idea? Is that a bad idea? Is that malicious? I'm not sure. I don't think I even really care at this point. But it is what it is. So if you're holding on to Ethereum, you may want to watch the price because as currently, Ethereum is extremely low in price. It's very, very low, in fact, $567. Just a little bit ago, we had this little bullish movement here. We're up to 328 billion. The other day, we were at like 300 billion. So we had a nice little jump in price over the night. So I'm glad I didn't sell anything overnight. So EOS has been on a steady rise against Ethereum since November 2017. Institutional interest in the project has been increasing, and the price has continued to reflect that. However, the real interest in EOS surfaced when the cryptocurrency openly declared war on Ethereum and announced that it will no longer be running on the Ethereum blockchain and it should be perceived as an Ethereum competitor, not an Ethereum project or just any other ERC20 token. My baby's screaming in the background. I do apologize, but babies are going to be babies. So while EOS has done enough to prove its mettle in the blockchain industry, it does not want to stop there. For long, EOS has been dubbed as the Ethereum killer. I like how they put EOS in brackets, as in case you didn't know. So you're like, what is EOS? I don't know what this article is about. I'm reading something about EOS, but I wonder what EOS is. I wonder what EOS stands for. It seems like a little wasted effort there. Has been dubbed as the Ethereum killer, and now it seems like the cryptocurrency is on its way to prove that, quite literally too. As many of you might be aware, EOS conducted its ICO on Ethereum and ended up raising more than 5 million Ethereum, present-day equivalent of over $2.6 billion. What? EOS held those funds under different accounts and has been exchanging some amounts from time to time to pay for expenses, which is usual. That's what all ICOs do. However, the real shocker was yesterday's EOS dump of Ethereum on Bitfinex, which caused a flash crash that took many by surprise. Ever since April, EOS has been continuously dumping Ethereum through its parent company, Block One. The total amount of Ethereum dumped for April and May amounts to over $900 million. It should be noted that EOS still holds 916,000 Ethereum in one wallet and another 237,000 in a different wallet. And this put EOS in a strong position to give Ethereum a tough time and pull it back the moment it starts to turn bullish. And now that EOS is a direct competitor of Ethereum. So to think that a blockchain project like EOS could resort to such criminal schemes to manipulate the price of another asset without any fear or punishment or prosecution is extremely disappointing. To add insult to injury, EOS just decided to dump its coins on Bitfinex rather than brokering an over-counter the deal with an interested offline party. So I'm going to talk about that real quick. First of all, I just want to talk about this first super long sentence. I don't even know if that's a run-on. Nah, I don't think so. Anyway, to think that they're dumping this EOS is like a crime or a fear of punishment or prosecution, that shouldn't be the case, right? Because they received all of this Ethereum for their ICO, and they have to sell it at some point. They really do have to sell it. That's how you get your money from an ICO. When you want to make a project and you raise money with an ICO, you might think, oh, look at those guys just made $6-10 million. Well, no, they didn't make that much money. That money is for the project. Sure, they could run up and run away with it, like some ICOs do, but that would be a scam and fraud. But the money is for their project. They have to pay developers. They have to pay for this, that, and the other thing. So they have to sell this Ethereum at some point. So that's where I kind of get a little iffy on it. But the next sentence does make a bit of sense. Why not just sell it over the counter and get your money that way? So the motive does appear to short appearing to short Ethereum, which can clearly be seen on ETH US dollar shorts on Bitfinex spiked more than 20% yesterday in anticipation of Ethereum dumps. So as long as EOS remains a competitor of Ethereum, and as long as it has access to such a large Ethereum that it can dump at any time with impunity, Ethereum investors will continue to be concerned. So if you do hold a lot of Ethereum, you should really be watching the price for these dumps. And maybe if you have to, dump it yourself and pick it up at a lower price. Now, I can't say exactly what's going to happen, but I imagine anytime Ethereum is going to be going up lately, it will probably be dumped very quickly because EOS is going to dump their coins on an exchange, which will drop the average. Now, that brings me up to another conversation that I had with somebody. I had with a viewer, and he asked me a question. He asked... basically, how is CoinMarketCap price determined? He was asking me a question in an email and said, he was wondering, how you can actually determine the price of these coins when they're all different on various exchanges. So, for example, if we just click on EOS here, since we've been talking about it, you can see that it's 1252, and then on Binance for let's see, EOS to BTC 1218, EOS to Ethereum 1217, and so on. So you might wonder, how do you get these different prices? And the thing is that all of these exchanges here, these are all exchanges. They don't make up their own price. Essentially, when an exchange pops up, it doesn't say, "Hey, I'm going to sell Bitcoin for 8,000." It doesn't just make up its own price. All the people that jump on and start selling it make up their own price. So they're all segregated, if you will. They don't average off of each other. Binance isn't looking at Upbit and saying, "Oh, okay, so EOS is 1252 on Upbit. We're only 1218, so we need to raise our price." They can't do that. They can't just raise the price. The people have to raise the price. So what you have to understand is that all the exchanges are segregated exchanges. They are solo, isolated exchanges. Of course, they can be transferred to other exchanges, but essentially everybody on that exchange, like I trade a lot on GDAX, Kraken, Binance. So when I go on there and I start selling, I will lower the price, or I will raise the price personally with my crypto. So, each exchange has their own group of people that are trading on it. Some have more and some have less trade volume. And it's just fluctuating at these different levels. So what CoinMarketCap does is they take an average of the exchanges and then they average that out. So we see that the average is 1228 for EOS from all these averages. Now, how many of these exchanges they actually consider the average, I'm not sure. What I can tell you is that a while back I made a video on this, and it was all the way back in January, and this caused a sundering in the price of crypto for a while. So CoinMarketCap removed South Korea exchanges, and I don't know about Ripple Market Cap, it doesn't really matter, but CoinMarketCap removed South Korean exchanges. So basically this morning we excluded some Korean exchanges in price calculations due to the extreme divergence in prices from the rest of the world and limited arbitrage opportunity. So we are working on better tools to provide users with the averages that are most relevant to them. So he was wondering as that how can there be a dip? Like what if a whale came on to an exchange, let's say Binance, and they dumped a ton of EOS, and EOS went down to $10? How would the price be reflected? Well, the average would be taken into consideration on CoinMarketCap, and it would be lowered. But the dip would be greater on Binance. But the thing is, it's going to correct itself very soon because there's something called arbitrage, which was just mentioned in this Twitter tweet. And so arbitrage is basically where you would, let's say I was on, let's find Kraken. So let's say I buy a bunch of EOS on Kraken at 1223, and then I head over to Binance or some other exchange where it's higher. Let's just say Upbit, for example, just throwing that out there. And then I sell it here. And then I go back to Kraken and I buy more. And then I go back here and I sell it. So that's arbitrage, is essentially going to a different market where the price is higher or lower and buying or selling, and then going to a different market where the price again is higher or lower and buying and selling it. And that's arbitrage. But what they mean by the limited arbitrage opportunity is unique to Korea. Koreans they value their currency more than the rest of the world. And so you can see like some of the Korean exchanges are much higher in price than other exchanges. And that's just because of the Korean mentality. Koreans are sort of like Japanese, except I think maybe they are more diehard. I'm not really sure which one. When something comes along in the Korean and Japanese culture, they go crazy for it. And with crypto, they are going crazy for it. And, a lot of them actually has problems. There was a government trying to regulate it because they thought that they were going to lose all their money. And they're worried about how many people are addicted to crypto. So you can see that like Korea is a totally different world. And they value their crypto more. One big thing about Korea, too, is it's very hard to get Korean money in and out of the country. Or rather, foreign money in and their money out. So it's harder to sign up to an exchange and transfer wealth back and forth in an arbitrage opportunity. in the Korean markets. So so they were removed from that because the Korean exchanges were essentially propping up the price of coin higher than what the average really should be. Now, I agree and I disagree with it at the same time. So this could go either way. I mean, you could go without it or you could go with it. Removing those does kind of skew the average down lower because Korean exchanges are so much higher. That it was essentially bumping up the average, and people were looking at CoinMarketCap, and Bitcoin was at 10,000, and then you look at GDAX, and it's only 9,800, and you're like, well, what's that all about? So they removed the Korean exchanges, and it lowered the price on CoinMarketCap, and people were looking at it, and they're like, wow, the price is so much lower, and so they're changing their bids around, and it really sundered the price of crypto for a while, and it was kind of a big thing. So that's an answer to your question. I did respond to him in email, but that's the best answer I can give you. Is that all exchanges are isolated in a way. I mean, of course you can transfer between them, but the users themselves that are bidding all bid in their own way and are willing to pay this much and that much. So it only fluctuates usually by a few pennies. But if a whale came along and bought a ton of EOS on Kraken or Binance or something like that, and it exploded the price, other exchanges would follow that because the arbitrage opportunity would essentially just even it out. Just imagine it like water just dipping around, and it's always going to find that even level, but it's still going to fluctuate just a little bit. You can't get it perfect. But that's all I have for you guys today. Thank you for the donation earlier, and I hope you guys enjoyed it, and I'll see you guys next time.